You know how loans work, right? You borrow money for a certain amount of time from a bank, another institution, someone you know, and you pay them a fee for lending it to you. In Canada, it works the other way around too. That way is through GICs, Guaranteed Investment Certificates. When you buy a GIC, you are essentially loaning money to a bank or another financial institution for a specific term or a period of time. With most GICs, you are paid a guaranteed interest rate upon maturity, when it's due to cash in, calculated on an annual basis. Generally, the longer the term, the higher the rate. Unlike stocks or crypto, GICs are a conservative, safe, low-risk investment. Some investors hold GICs in their portfolio to help protect their money against inflation, if the interest rate is good. Who buys GICs? Anyone over the age of majority who has a savings or fixed income goal. It can be short-term, like saving up for a down payment on a house, or buying a car, or planning a wedding. Or it can be long-term, like saving for a child's education, saving for retirement, or just making money on the money you're saving. You can hold GICs in registered and non-registered accounts too. That means you can be strategic with your investments for tax purposes. How do you get the best GIC rate? You shop around. Most Canadian financial institutions sell GICs, but not all are the same. When comparison shopping, be sure to look at what's offered at banks, trust companies, credit unions, investment firms, and of course, digital banks. Actually, digital banks are pretty competitive with their rates and range of GIC offerings. Compare interest rates and look for the right combination of a term and an interest rate that makes sense for your goals. And timing matters too. Make sure that you don't need access to that money while it's invested in a GIC. Many GICs are non-redeemable, meaning you can't withdraw your money early. If you need it, you may have to borrow money instead, which could come at a higher cost than what you're earning on the GIC. When the Bank of Canada interest rate, which banks' prime rates are based on, is relatively high, GICs are pretty attractive. GIC interest rates are based on the prime rate and then topped up with a premium so that the interest rate you get is worth loaning your money for.